Good morning. We'll start off with the good news. Veg oils is surging overnight. Surging doesn't mean it's going limit up or anything like that, but it's the positive of all the complexes. Um, so what and I've been talking about Fibonacci for a while here. So I'm using this information that 144 uh, company has actually put out in some of their newsletters. And Fibonacci can be measured going up and down. So these rules might not make sense, but a 38.2 keeps the trend intact. 23.6 shows level of the market is extremely strong or weak, depending on direction again. And 61.8 wide swings in the market in a trading range. And then 78.6 can send the market actually going, ending or start of a very strong bull market. So that's why I'm always talking about these things. So it has backed off over the last couple of days. It's probably something that I've talked about yesterday, and trend is still continuing. So here, just Chicago wheat is what's mentioned in that previous article. So it's below the $6 futures and below the 100-day moving average. So some of these and still in the upward trend channel. So that's good. So corn is and the Chicago wheat are very connected. So you can see failing to remain above the 38.2 retracement value or rate added and the 100-day moving average. So is this a take the profits Friday, or is it harvest pressure? Palm oil rises, as I mentioned, and soybean oil is right along with it. Uh, and the result of some of the pressure in the Middle East again. But you can see here on your West Texas intermediate oil, it broke out of this a downward trending channel. And is it drawn perfectly? I'm going to say no, but it's actually testing that 61.8 and could very well end up in that direction if there's any more heating up of of tensions. So you can see the palm oil 70. It's trading at that 78.6, so that's as stated in that first slide. We could get a wild bull market, or this could actually retrace all the way back if it's not accepted. ADM pauses because of CO2 injection capture in uh, in one of their plants. So that's caused some disruption in I think they're the second largest plant in Illinois, I think, and yeah, that's going to cause some issues there. Weather, your drought monitor came out yesterday. There's some increasing drought in the corn area, but a decrease in some of the soybean area. Overall, drought just decreased because of that Hurricane Helen that went through and took away some of that drought risk that was there. The 6 to 10 day, what I'm going to probably focus in on is there's probably going to end up to be some good harvest. So will there be harvest pressure on the markets showing up in the next week or two on the major crops that are getting harvested? So soybeans first, and then very likely the corn after. Although I think it was 20 and 26. Um, so here is your Sask Ag report. It came out with 33 bushels the acre. So just remember that. And we are ahead of the 5-year pace and ahead of the 10-year pace, but at 91% harvested. Now, this 33 bushels the acre is identical to the number that they said last year. Now, is that what got realized at the end of the day? And how is this getting measured? Is it just anecdotal? I don't know if anybody's walking the fields, but it is a 33 bushels the acre. They are the largest grower of the canola in the prairie provinces, and is a trend decreasing or increasing. And again, it's a number without the numbers coming from StatsCan, and the next number that we do see is December 5th. Oil seeds. So just as you can see, all the veg oil markets are on a bit of an increase, and you can see all the cereals are lower. So start off with canola. It's still maintaining its upward trend. It beat this number that I had circled yesterday. So we're trading at the 631, and we're approaching this 61.8 retracement value. Uh, the watch out be is what's going to happen if we break that trend line. Is that a buy or whatever, right? So I'm pretty happy that we've got a lot of our positions on for canola, that's for sure. So board crush margin, and if you look at it, you got $133 versus 226 a year ago. The trend in the last month or so, I really don't care about. Just and it's there's no crying here. That's okay if the canola can actually rally and take away some of that. That would be fine with me. Rapeseed, breaking out of the upward trend. It's trading above the 61.8. So if we can get some leadership from rapeseed, that'd be great. And you can see what this is doing is actually breaking the wide gap that was rapeseed being uh, that much more expensive, and now it's actually starting to improve. Now, are we seeing improved canola demand is the question. Soybean oil trading right at and above that 61.8 on that trend line. So that's fantastic to see. Veg oil, as I showed before, around the 78.6 retracement. Um, and some of this leg that here we got here was Euro extended the implementation for another year of the ban using palm oil from the non-certified plantations. So um, we'll see if there's any. Yeah, obviously they need the oil, and that ban is maybe going to cause some problems for their product that they need. Soybeans not following the same trend as oil, and you see that with the crush margins. You can see the crush margins because both meal and oil have rallied against the seed not increasing into the same kind of rally. So you've seen a bit of a surge in soybean crush margin. Palm oil, already mentioned. Canadian dollar broke this trend line, now trading below. I mentioned that yesterday as well, but it's trading below the 100-day moving average. Probably the next support area, if we're going to call it support, is right around that 73.5, somewhere in there. Wheat, none of these stories are exactly what I want to talk about, but it did trade above that previous high that was made there. Did not breach the 38.2 retracement, and it's having trouble trading above that 100-day moving average. So next year's wheat, I was looking at targets somewhere in this range here, and we can pick those targets for individually with clients as well. But this is for next year, doing futures first HTAs with companies that will allow that to happen at this $7 or greater futures value for that first sale for next year. So consider that, put some targets in. We'll maybe discuss that further. Chicago wheat, same idea, not trading above that 38.2 and breaking below that 100-day moving average. And your hard red winter, same kind of story. And it's not a surprise that milling wheat in France is actually giving us that same kind of story as well. So corn, uh, again, 38.2 and resisting that 100-day moving average. Next report is October 11th, so USDA crop production report. So we'll see you next week.